Now, the most popular video on my channel that shows you how to trade a one candlestick strategy on a 4-hour chart was for a bullish setup, and most of you wanted to see how you can trade the same strategy on a bearish market. Now, I told you guys that trading this strategy can be done on a bullish and bearish setup. You don't have to only trade it on a bullish setup, but the conditions are in reverse. I'm going to show you that on a chart right now. But before we go there, if you're new to the channel and you like this kind of content and you don't want to miss any video that I'll be posting, be sure to subscribe, like this video, and share it with your friends so that they can also benefit. And also, if you want to receive VIP signals, write me a WhatsApp on my WhatsApp number, which is in the description of this video. And also join the free Telegram. Don't go and search my name on Telegram, you'll be scammed. Just use the links in the description to sign up. And also go and use Audacity Capital and some of the programs I have in the description. They are really good and reliable. So guys, we are going to go onto the charts and I'm going to show you how you can trade the 4-hour one candlestick strategy on a bearish market. Let's get started, guys. All right, guys, so we are here on the charts and I have drawn out an illustration here that you guys already know if you've watched the full course on the one candlestick strategy. Now, this strategy has brought a lot of controversy among the people who are trying to use it, or the traders who are trying to use it, and they have not yet understood exactly how to do the drawings. Now, the drawings have to be done exactly in this order, okay? Just watch what I'm doing here and then go and do the same on your drawings, okay? So, since we are trading off of the 4-hour chart or of the 4-hour candle, we want to draw the markings on the 4-hour candle, okay? So the 4-hour candle is the higher time frame candle that we are going to mark, because we are going to look for entries on a lower time frame like the 5-minute chart or the 15-minute chart, okay? So here in this strategy, when it is a bearish market, first of all, before I go any further, guys, when you see that the market is bearish, before you take these trades, before you do the markings, make sure that the market is creating lower lows and lower highs like this, okay? Make sure that the market is in a downtrend, okay? Don't start drawing the bearish candles like this. Don't start marking the bearish candle when the market is in an uptrend. Don't do that. Your chances of winning are going to be very minimal if you do that, okay? You can mark this when the market is trending to the downside, or when you're seeing that the market is breaking structure, breaking recent lows, okay? The market is breaking recent lows and pulling back into them and breaking them like that, okay? So make sure the market is in a downtrend. That's the first thing you do, okay? Make sure it's in a downtrend. You can also determine whether the market is in a downtrend using a moving average. For example, if the moving average is above the price like this, okay, a 20-period moving average is above the price, okay, something like this, okay, this is let's say 20 moving average. You guys get it, okay? So you need to make sure that the 20-period EMA is above the price, okay? It's above the price before you start doing any markings on the 4-hour chart. So after you've determined that the market is trending to the downside, what you do now is you come and look for the most recent closed 4-hour candle. Don't look for the candle that is printing. You see this small candle right here? This is the candle that is printing. This one here, this is the current 4-hour candle. Don't mark this candle. Mark this previous closed 4-hour candle. This one here, okay? Is the one that you're going to be marking, this one, okay? So what you do in a bearish market, you want to put a line at that candle's close at the bottom here. You see the 4-hour red candle has its close at the bottom, it's open at the top, okay? So place a line at the closing price of the 4-hour candle, and then place another horizontal line or a ray at the high of that 4-hour candle. Okay, after you've done this, just very simple markings. After you've done this, what you do is in between these two lines here, that is called the tradable zone. I call that the tradable zone. Now, you want to mark a zone in between there, okay? I like to color mine purple. I like to color mine purple because that is the color that I find really nice to use here, okay? So you mark it and place a purple zone in between the high and the close of the previous bearish candle. So this is your tradable zone. Now, what do you do with this strategy? With this strategy, you are trading the distribution of this candle here, okay? This body of the candle here is the distribution zone of the candle. You guys know that in the market there is what we call AMD, okay? So this candle's internal structure can be like this. It opens at the top, it goes up and creates the wick, this wick here, okay? Creates the wick, then it starts moving like this to manipulate. Sometimes it can do this, okay? Then it now starts to distribute, creating this mass here, which is the body of the candle, okay? It creates that body of the candle and then it continues to move lower. It can go down like here, create that wick down, okay? And then it closes like that. So the internal structure of this candle can look like this, okay? Can look like this. So the distribution phase where most of the trades are taken, most of the volume of the market is found. It is found here inside of the body of the candle. So always market will pull back into the volume of the candle, like here. It will pull back into this distribution zone, okay, before it starts to sell off again to continue with the bearish momentum. So in the market, there is what we call accumulation, represented by that A. There is what we call manipulation, okay, and then there is what we call distribution. That is the famous AMD pattern that you guys have probably heard of, okay? The AMD pattern is formed on each and every candle. The daily candle has its own AMD pattern. The 4-hour candle has its own AMD pattern. The weekly candle has its own. The 5-minute has its own. Every candlestick has this pattern within it. Accumulation, where the orders are accumulated before the market manipulates those orders, maybe going to where there is liquidity to grab like the stop losses or fetch more liquidity or fetch more orders by manipulating. Then after that, the market distributes to the direction which the market wants to go for that day or for that 4-hour or for that 5 minutes, okay? So always the market will accumulate orders. It will manipulate those orders, okay? That's where you find people's stop losses being hit, and then people say their stop loss is being hunted. Then after the manipulation, there is usually a distribution. Now, this manipulation, sometimes it is used by the big players to fill more orders that were left behind, okay? So the distribution phase here is where the market moves in one direction for a long period of time, creating the body of the candle. Or it is the time frame or time period within the candle where a significant number of one-sided traders appears. For example, in the distribution here, only the sellers were in charge. The sellers were very many, so they distributed the market to the downside, okay? Then the market closes. So the distribution phase is where we want to take our trades with the AMD pattern, okay? So this is how you trade this, for those of you who did not know this, okay? I cover all this in the full course that I'll leave at the end of this video. So please don't skip this video. Watch it up to the end. Then you'll find the full course video of this strategy at the end of this video. Guys, if you're liking this so far, please give a like on the video. Subscribe if you've not yet subscribed, and let's continue building ourselves up, okay? If you have questions, drop them in comment section down below. All right, so I am going to take you guys onto the live charts, and I'm going to use some bar replay to show you how this pattern would work or would play out on the GBP USD 4-hour chart, and hopefully you guys will take out value from this, guys. So we are here on the GBP USD 4-hour chart. As you can see here, this is the 4-hour chart, and this is GBP USD, as you can see up here, top left corner, okay? So we can see that right now there is this candle which is currently open. So we don't mark this candle. We are going to mark the previous closed candle, which is this one here, okay, this one. And before we do that, we must first know that the market is in a downtrend, okay? So you can see GBP USD here has broken most recent structure right here. You can see that this was a level of structure right here, which GBP USD has broken under and retested, gone down, and now it has retested it again. It's going down. So this is a downtrend. That is a downtrend. In other words, you can see that this is a market which is creating a high, a low, equal highs, a lower low, lower than this, okay? A lower high, a lower low, a lower high. Now, it's probably going to go to create another low down like this, okay? So, this is a downtrending market on the 4-hour chart. So, we've determined that by market structure, breaks, and also we are seeing the lower lows and lower highs. And also you can see here, there is this simple moving average, which is a 20-period moving average, as you can see right here. This is a 20-period moving average, okay, which I've applied on the chart. It is also above the price, so we are confirming that this is a downtrend. Now we can go ahead and do our markings on the 4-hour chart. So here I am going to get the horizontal ray. I'm going to mark the high of that previous candle, okay, like that. And then I am going to get another ray and I'm going to place it at the close of that candle like that, okay? So that is the high and the close. Now, keep in mind that this candle here, which is open right now, is not open. We are assuming it's not open, okay? I'm just going to show you this with a replay so that you guys can see how you would trade this, okay? So we would place a rectangle in between those two lines like this, okay? In between those two lines. So that purple zone there, that is our tradable zone on a lower time frame. So now what we are going to do is we are going to get the replay tool here, okay? We are getting the replay tool and we are going to place it here, okay? So that candle has not yet printed, okay? Because we've gone in replay mode. Now here we are going to now go down to the 5-minute chart. Okay, after the marking, we got the 5-minute chart. When we reach the 5-minute chart, we'll see the purple zone. Okay, so in the 5-minute chart, this is the purple zone right here. Okay, what we're waiting for is the market to pull inside of this purple zone before we place our sells. Okay, you can see here, right? Now, what we are going to do is we are going to play back and see how the market goes into the purple zone. If it goes into the purple zone and gives us confirmation candlesticks like a bearish engulfing, or if it crosses below the moving average, or if it gives us a head and shoulder, or the 3 black cross, any candlestick or chart pattern within the purple zone to confirm a sell, then we can sell from this purple zone and take a 1-to-2 risk to reward ratio profit. Okay, so let's play along and see. Okay, so wait here, we don't panic. Wait for the market to come back into the purple zone and give you some momentum candles for you to enter, okay? Just wait, just wait, just wait, okay? Not yet. Don't jump in there. Wait for the market to come back into the purple zone or near it, okay? All right, now the market has come into the purple zone. Now here, you're going to get ready to take your trades. Now here, you're going to apply your price action knowledge. The knowledge you've learned through your price action and other things. You can use, for example, a Fibonacci retracement, okay, to draw a Fibonacci from the top, okay, of that market move to the bottom, like here. You see where the market has stopped here? You can draw the Fib up to there, like this, okay? And then the area between the 50% and 61.8, that is where you're going to take your trades, okay? You see that where I've put the rectangle, that area there is called the golden zone in Fibonacci, okay? That area. So that area is where we are going to be looking to take our trades, okay? We're going to look to take our trades inside of this golden zone within the purple zone of the 1 candlestick strategy, okay? So I'm going to play and see what is going to happen. If I see a bearish candle with momentum, I'll enter the trade, right? Now here, that played out a little bit faster, but you can see that the market has stopped at the golden zone, okay? It stopped at the golden zone, and then it rejected. Now, this is where I am going to place my short trade, okay? After this momentum candle, I place my short trade here, okay, and my stop loss is going to be above the 61.8 Fibonacci like this, and then I target the previous lows, okay, target the previous lows like here, okay, for a 1 to 2. Just target a 1 to 2. Don't look for too much money with this strategy, okay? Just target a 1 to 2, then you hold your trade and see where the market will take you. As you can see here, if we took this trade here, you would see that this market would play out and would go into profit and would probably even win this trade, okay? You can see that the market actually reached take profit here and won this trade. Guys, there is nothing much that I can show you apart from you going to experiment, backtest, and use this strategy. This strategy is very potent. It can make you a very, very profitable trader. But remember, be patient when you're trading this strategy. Don't jump into trades anyhow. Like here, if you jumped onto this trade, you'd be stopped out. Wait for the market to come into the purple zone or very near it and give you some good candles. Like this was a momentum candle selling off from the 61.8 and 50% Fibonacci level for us to go short for a 1 to 2 risk to reward ratio. Guys, I don't want to make the video too long. If you found value with this video, please like the video, subscribe to the channel. Guys, I'm bringing you more content like this. So subscribe to the channel, show some support, subscribe to the channel, and let's grow together. Thank you guys for sticking around. You have any questions, comment down below. Thank you. Until next time, peace and out.